Welcome to IndianShareTips.com, and we are going to discuss what is securities under ban in F&O in the Indian stock market. As we all know that F&O trading is a speculative kind of trading, as it helps you make profit by speculating on the future price movement of securities. And this can be done in stocks, currencies, commodities and other securities which are traded in the capital market. However, when it comes to F&O trading, there is a limit on quantities that one can trade. If the limit is exceeded, the NSE imposes a ban on F&O trading in securities. And through this video, we will be understanding that what all this constitute and how you can make use of it to make money in the market. Let us first of all understand what is the securities ban in F&O segment. A securities ban in F&O trading is when the NSE imposes a ban on new futures and options contract on a particular stock. This means that traders and investors cannot open new positions or enter into future and options contract on that security. However, an important point is that the existing open positions can be closed even in securities under ban. Means that if you have an open future or option contract on a stock and security is placed under a ban, you can still close your position after the ban has been important. So this is an important aspect which you should keep in mind. For example, say you entered into a futures contract in stock on 10th August. The exercise date of the contract is say 31st August. And on 20th August, let's say an F&O ban is placed on the stock. So from 20th August, you will not be able to buy any more future or options contract of the stock. However, the contract that you have bought on 10th August will be can be closed on or before 31st August even though a ban has been enforced. Let us first of all understand that why a security ban is placed in F&O segment. So it is basically to limit the speculative activity in the market. A trader or a company with a lump sum amount may try to manipulate the market by heavily pumping or dumping a stock of their interest. Remember that this ban is placed only on F&O stocks and not on the index F&Os. The ban does not affect normal intraday or delivery trading in the stock because while you are doing intraday or delivery, adequate money is being catered for it by the exchange, whereas in future it is only the speculative activity. Let us now understand that when is the securities ban imposed. The NSE monitors the total open positions in F&O contracts of each stock. There is a specific limit up to which new F&O contracts are allowed in each stock. If the limit is breached, a ban is issued by the NSE and it reminds you whenever that limit 60% is reached, that is when the first reminder comes. The entire concept of securities under ban depends on market-wide position limit, also called as MWPL. Market-wide position limit is determined as the lowest of 30 times the average number of shares traded in the cash market in stock exchanges in the last month, or 20% of the shares that are held on a free float basis, that is shares that are not owned by the promoters of the company. This limit is the maximum number of open positions that a particular stock is allowed in F&O trading. This limit changes every day in the market, and NSE keeps track of this limit and updates it regularly through the circulars, and one need to keep it under observation. The limit is maintained at 95% of the market-wide position limit. So if the aggregate value of all open future and option contracts exceed 95% of the stock's MWPL, NSE imposes a ban on the stock. There is no specified time limit on the ban. The ban remains effective till the aggregate value of all open positions of F&O contract on the stock does not fall to 80% of the MWPL or below. Once the 80% limit is reached, normal trading can resume and NSE releases a circular every day post 6 p.m. to inform traders and investors on securities under ban. Security could be under ban for as little as one trading session. Now the most important part which you must understand is the implication of trading on securities under ban, which means that traders are prohibited from opening any new position on stocks that are under ban period. If, however, any trader disobeys the ban and opens a new position in the derivatives market, they would face a penalty on the trade. The penalty would be calculated as 1% of the value of the increased position in the stock, subject to a minimum sum of rupee 5,000 and a maximum of rupee 1 lakh. So onus is on you to keep track of the securities under ban, and you cannot say later on that I was not aware of it. Generally, even broking houses, trading platforms also let you know that these securities are under the ban and you should not trade on it. And you must understand that a ban in a stock in F&O segment leads to depression in the stock prices. So this is how basically it affects the stock price. So it is important for you to understand this ban aspect, as ignorance is no excuse and you will lose money if you trade in a banned stock. And remember the implications of the stock going into the ban. Remember to subscribe to our best bank nifty option tips, and you can make money in Indian stock market even with a small capital of rupee 5,000. We are able to capture the profit in the shortest possible time as we pick the trend at the right time and exit timely.